Hi there, and welcome to the Enlightened Super Trader Education. This is Reynaldo speaking, and we are going to look at the weekly market update. Before I go through a couple of announcements, received a great feedback from last month in terms of the free half-day class on how to consistently make money trading the currency markets. We've got another one on March the 12th. And also, I'm currently accepting new applicants for March, and these are based through one-on-one coaching, and you'll receive free laptops for the successful candidate. Obviously, I don't accept pretty much just anybody. I have to go through first an assessment. And the free laptop, by the way, is only available in the US and the UK only. On March 4th, which is tomorrow, I'm going to start the Trader Dojo. So if you live around the Bay Area, then never trade on your own ever again. So every Mondays and Wednesdays, it's a new program from 11 a.m. to 1 p.m. to catch the last 2 hours before the market basically closes. And I'm there for you, looking over your shoulder and helping you out with your either trading system, your trading psychology, technical analysis, pretty much everything. Okay, so you can also share potential trades if you do have any, and it all depends on as well whether if a really a good trade or not. And this will work for stocks, futures, and forex. Unfortunately, since I am not masterful in options, so it is not basically applicable for options. Alright, in March 16 we have the Ultimate Trader, which is a 12-part series. We're going to look at the part 3 of the 12-part series, which is now the foundation of technical analysis. And based on that, we are going to go back to basics, looking at price action, supply and demand, and how pretty much everything works similar to an engine of a car. And for March, we currently have a special on based on March Madness, similar to basketball here in the US. There's what we call March Madness. So you will be able to try our Action Taker or EST Trade Alert for $1 for the month of March. So it is only pretty much for March only, so make sure to take the opportunity. If you've got nothing to lose, that's pretty much less than a cup of tea or a cup of orange juice, right? So give it a shot, and you never know, you might learn something. You might even be able to make money with us basically for free as well. Alright, thank you very much for that. Let's go through looking at the Dow Jones Industrials 30 based on the monthly chart. So last month basically create a new high, 14,14149. So it's just 51 points above the high, 14,198. Since the bulls are currently in control, we're just looking at it at the moment. The odds and probability they will push through and break 14,198 is highly probable. However, the caveat is that we are currently in a level of supply at the moment, but the current price 1489 is in an equilibrium area. So you can see through there's a 50-50, create a new low though for the month already of March, but then again, if it doesn't want to break 14,198, this is going to fail. But just looking at it, currently create a new higher high, odds and probability to beat the last high of October 2007 is highly probable right there. Now if you can see through here too on the actual weekly chart itself, at one point in time there's a lot of selling pressure to the downside all the way down to 13,784 right there, and then at the very pretty much last part the bulls took over, creating a new high. So Booyakasha once again, pretty much what I stated from last week's weekly market update, that I was bullish to break and to create a new higher highs, with the caveat that it has to break through the last high, was highly probable. Now from the opening though at 14,000 all the way to the low at 13,789, they will retest the lower shadows, no doubt about that. When I don't know, but definitely when the time comes. Okay, looking at the daily chart, we can see through here. This was a necessary thing to do for the market to create a new higher high, higher low, create a new higher high, very short higher low. So there's an indecision factor, lower lows, lower highs. So in terms of a short-term swing trader perspective, stabilization, minor correction before continuation to the upside, or if they don't want to, if this is already the correction part, then based on whatever news we're going to have this week, the bulls are going to push it up pretty much on to the upside right there. Talking about the news, let's go through and have a look on what's happening pretty much in this week. So you can see through here, building approvals in Australia, it was only minus 2.4 compared to the forecast around 2.8, and that's what cost actually the Australian dollar to drop further. And now we have the euro based on expansion and employment change 59.4 based on the forecasted one of 77.5, which I believe the euro came back up a little bit. Alright, now we have construction PMI based in the UK right there on the pound, 46.8. So a lot of Australian reporting, cash rate, RBA rate statement. So there's really nothing in the US in terms of red alert right there. There's none except for the FOMC member yellow pigs, which is a medium impact. Tuesday we have ISM non-manufacturing PMI once again, which pretty much almost happens once a month. The pound service PMI, Aussie GDP, then the Bank of England Governor King will speak based on the pound. The dollar ADP non-farm employment change on Wednesday. Bank of Canada rate statement. So these are all pretty much all the red ones, the red zones. Overnight rate, IV PMI. So they'll be on Wednesday morning at from 9 a.m. to 10 a.m. Eastern Standard Time. Then we have back to the Aussie trade balance, and on the yens in Japan, monetary policy statement, overnight call rate. Thursday, Bank of Japan press conference, the Swiss foreign currency reserves, and then we have a chairman, Jordan, will speak based on the Swiss National Bank Spanish 10-year bond auction all the way. Thursday, the pound once again, euro, the CAD. We have unemployment claims and trade balance in the US, ECB press conference, the euro, the yen, the current account, and China right there, trade balance. And Friday there's a couple right there in the US, unemployment rate and non-farm employment change. So it's not going to be perhaps not as volatile as last week, based on Bernanke's reportings and stuff, which caused the market to go pretty much up and down solidly right there, right? So what is my take on it? Take on it is a short term, very short term. They may be able to fill in the blanks right here in terms of the lower shadows. So correction, minor correction before a continuation, but since the bulls are actually currently in control at the moment, pretty strong, then if it breaks through here at 41.49, especially around these levels, odds and probability continuation, like I said, to break through the 41.98 is highly probable. Alright, that's my take on the market for this week. I hope you enjoyed it. Take care until next time. Happy trading.